Hi, this is Chris with Connect.ca Realty. Thank you for taking the time to join us for our October newsletter, where we're going to discuss the market stats from September 2024, discussing various topics as well as what's hot in the marketplace right now. So without further ado, let's get things started. So we begin with some positive news. Home sales have hit 7-month highs across the country. So home sales nationally have rose by 1.3% in August 2024 to hit a 7-month high. Now, it's probably no surprise. This definitely coincides with the Bank of Canada lowering rates in June and July of this year. Of course, they also lowered rates in September. They're expected to do so again in October, possibly a few more times this year, and also into 2025. So what this is expected to do is bring more buyers off the sidelines as their purchasing power is gradually increasing. So as rates come down, your buying power naturally increases because of it. So it's definitely going to open up home ownership to a greater percentage of people. So we should keep on seeing home sales increase month over month again into next year. Will we see massive spikes from month over month? Probably not, but we should definitely see gradual increases, especially as rates do continue to come down. So speaking of housing prices across the country has pretty well increased in every city over the past 6 months. You do see the odd decline in an area like Regina, but in Toronto specifically, we do see prices increasing over the past 6 months, which is definitely a good sign. Not huge increases, of course, but home prices are pretty much remaining steady, but increasing a little bit over that 6-month period. All right, so let's look into to the market in a little more depth. Looking at sales activity and the average prices, sales activity has pretty well increased year over year for every unit type. Pretty well the only outliers are townhomes in the 416 and condos in the 905. But year over year, we have seen increased sales activity for pretty well every housing type. Downtown Toronto, as an example, we have actually seen sales increase by 2.2%. So while that's definitely a widely discussed marketplace in terms of what's happening there right now, we have seen sales increase by 2.2% year over year, which at least is a good sign. Looking at the average prices, now this is definitely where the inventory discussion comes into play. So we have seen prices decrease year over year for every housing type that we track. So again, with inventory increasing, as we'll see later on, it's definitely very much a buyer's market. So being a buyer's market gives you more negotiation power, which has definitely resulted in the prices come down a little bit. Not drastic declines, but but they're definitely down from last year. Now, generally speaking, looking at the average sale price, so the average selling price for all home types was $1,107,291, which does represent a 1% decrease from September of 2023. However, on a seasonally adjusted basis, the average price saw a slight increase compared to August 2024, indicating a potential stabilization or upward trend month over month. Again, this kind of touches on what we discussed earlier. With rates coming down, you have more people coming to the marketplace to purchase properties. So as the rate cut of September kind of takes hold, October, again, another rate cut's expected. It's not unlikely that we should continue to see prices increasing slightly month over month. Just looking back over a period of time, since June of 2020, prices are up. So of course, if you're buying real estate, if you're investing in real estate, if your idea is to hold on to it for the long term, which is definitely what we suggest, prices do increase over a long period of time. So yes, there may be short periods where prices are up, are down. It's always a roller coaster, but over historical time period, over 5, 10, 15, 20 years, prices are certainly up. Just looking at the prices of condos 10 years ago in Toronto, they're below $400,000. Now the average price of a condo is just north of $700,000. So you hold on to the properties, you will see the benefit over a period of time. Short term may not be the greatest, but those who hold on to properties definitely do benefit from holding on to the asset. So here you can really see the story of inventory in the city. So active listings have increased by 10.5% year over year, providing more options for buyers. Months of inventory likely increased due to a rise in listings outpacing sales growth, leading to a more balanced market. But it's really a buyer's market. So for those who are looking to get pretty well the best deal possible, now is a fantastic time because we do see a lot of inventory. As that inventory continues to be absorbed, there's going to be less options available. With more buyers come to marketplace, there's going to be more competition and demand for those hot properties, which will then result in prices increasing over a period of time. Again, we have seen prices increase already from August of this year to September. So looking into the later half of the later bit of the year into 2025, as this inventory is absorbed, prices should increase over time. All right, so let's look at the Trev average price along with the Bank of Canada overnight rate. With consecutive rate cuts this year, the market seems to be stabilizing. Prices are seeing an upward trend gradually. So that's a key. It's going to be gradual. We're not going to see huge jumps in prices from month to month, especially as these rates are steadily coming down. We're going to see gradual increases, especially again, looking back at the months of supply that we have in the marketplace. Until that supply starts to be absorbed at a higher rate, we're not really going to see huge price increases month to month. But it's certainly a good sign that from August to September, we have seen the average price increase a little bit. Just looking into 2025, there are economists and banks predicting that by Q4 of 2025, we should be at about 2.5%. So if that is the case, and we do continue to see these rate decreases into 2024, 2025, that's again only going to increase buying power of people and bring more people off the sidelines into the market. So in terms of pricing in general, it's definitely a good sign if you are a homeowner right now. If you're looking to get into the market, now is certainly the best time because we're probably only likely to see prices increase as the market situation changes. All right, let's look at the GTA market stats. So the sales are up 8.5% compared to September of 2023. However, the market remains in a buyer's market with 5.13 months of inventory across GTA. So again, it's all a story of really supply and demand. So we have a lot of inventory across the GTA. Until that starts to be absorbed at a higher rate, we're still going to see prices pretty much level out. You may drop a little bit or increase a little bit from month to month. But until that month's supply gets absorbed and become more of a balanced market, the situation very much is in the favor of buyers at this point in time. All right, now let's discuss the affordability gap between low-rise and high-rise. The average price for a detached home in the 416 is currently $1,685,755 compared to $707,917 for a condo. This makes a difference of just shy of $1 million. You're looking at $977,838 is the difference in the average purchase price between a condo and a detached property, which is massive. So this is key, of course, because if someone is looking to buy a property, maybe they're a first-time home buyer, you're looking at these prices. Sure, you may want to have a large property with a lawn, pool, but the fact of the matter is this is just going to be unattainable for a lot of people. So historically, when we do see a gap like this, we do see a lot of interest, a lot of demand creep into and jump into the condo market, which should result in the average condo prices increasing gradually over time. They'll never, of course, come to where the detached average price is. But as people jump into the marketplace, again, with rates dropping, you should see condo buyers jump into the market more, resulting in more sales, absorption of inventory, and the prices should increase again over a period of time. We've seen this historically when there's this massive gap. People just can't buy detached properties, so they look at other housing types. And because of that, we should start to see prices gradually increase, especially for condos in, really both the 416 and 905, because those gaps are pretty substantial between those unit types. All right, now let's look at the affordability gap between the 416 and 905. These gaps are really a leading indicator for kind of what's to come in the short and long term. The blue is obviously the 416, whereas the 9 would be 905. The gap did narrow considerably in August, but it's started to widen again between these two markets. The reason why this is a really key point to make is as the average price for condos between 416 and 905 starts to shrink, this always then makes the properties in downtown Toronto, the 416, more desirable because you have an option. You can buy a property in 905 or you can buy one in the 416 for close to the same purchase price. A lot of buyers, investors, end users, they really do like being in Toronto because of the quality of life that you have in terms of you have the top restaurants, bars, entertainment, transit, employers. They're really all in the heart of the city. So when that gap narrows between the 416 and 905, the 416 becomes more and more desirable. Then you start to see the prices increase and you start to see a larger spread between average prices in the 905 and the average price in 416, which is what we've seen in September of this year. What's going to happen throughout the rest of the year, we'll wait and see. But it's likely that we should continue to see the 416 start to see a bit of a spread between average prices there compared to 905. But again, we'll wait and see what happens, especially with rate cuts as they really hit the marketplace. All right, let's look at some hot developments that are selling right now in the marketplace. So we'll highlight a few developments that are really, really great for investment purposes. So if you're an investor looking to purchase a property, we'll highlight a few here for you. First, we have the platform, which is located in downtown Kitchener. This is directly across from the Google campus, so fantastic location, close to all the tech jobs in the city. Closing, or at least occupancy, isn't expected till at least 2028. You have a 10% deposit schedule spread out over a 1-year period, and you're being paid 5% interest on the deposits that you're putting down. So for investors who are looking to get into marketplace, low purchase price, this is a fantastic option. So if you're interested, definitely let us know. Then there's also a great opportunities in Punta Cana in the Dominican Republic. So Palm View is one such example. Low purchase price of $146,000. Of course, those are US prices. But for investors who are kind of, sick of all the taxes that we pay here domestically, there are some great tax benefits afforded to buyers who do buy properties in Punta Cana in the DR. So if you want to discuss this one further, happy to do so. It does come with hotel management. Properties are fully furnished, so they really are ready and set to go from day one, which is fantastic for those who are really looking for a hands-off investment opportunity that generates some very good cash flow as well. All right, let's look at some coming soon options in the marketplace. So we have the Freed Blue Mountain development coming up. Expected launch would be in the middle of November, so about 1 month away from today. Located directly at the base of Blue Mountain, so fantastic location for those who like to ski, who like the winter activities, even the summer activities, because Blue Mountain's not just a winter destination. This is a fantastic option for you. It comes with hotel management. Suites are being furnished by Restoration Hardware. It's going to be a very beautiful development. If you're looking for something that you can use for a weekend or two throughout the month, rent it out when you're not there. Fantastic option for you. There's also the Clove in Etobicoke, which is a very large master plan community being built by Madme Homes. So that's going to be very popular. We got a lot of interest already for that one. If you're interested in learning more, reach out to us. Happy to discuss it with you further. And then, of course, there's also resale properties and assignments available right now. For those who are looking to get into the market and maybe find a really good deal, the assignment market does have some very good opportunities for you. You can find some distressed sellers in that market. So again, if you're looking to get a very good deal, if you're looking to buy an investment property or buy some to live in yourself, reach out to us. We have some fantastic options. Happy to share some details with you. All right, that wraps up our discussion for today. Thanks for taking the time to watch this video and to go over the details in this newsletter. If you have any questions related to any developments selling right now or up and coming developments, feel free to reach out to us. We'd be happy to schedule a call with you and help you out further. Again, thanks for watching. Have a great day. Bye now.